Sartorius, I think we've talked about it before, but maybe not in any great detail. So this was my best performing stock of the week. Is up about, I think, 14% or something like that. I buy the SRT3 version, which is the preferred stock, and it owns stakes in the biotech called Stedim and the lab side of the company. So Sartorius was founded in 1870, Steve. More or less provides solutions for the sort of pharma and lab industry. They straddle a few areas, but if you're thinking about things like filtration, fluid management, fermentation, purification, that's the sort of key areas on the bioprocessing side of the business. And the lab section is things like balances, liquid handling, water systems, more filtration systems, separation systems, lab consumables, and things like servicing and QC testing. So that's kind of the broader picture of what we're talking about here. So look, as you can imagine from the sort of list of services that I read out, they've had a cracking COVID period, but a little bit like the toilet paper fiasco, where fellas were filling up the trolleys full of multiple packs of toilet roll. That kind of happened in the lab consumables industry, and look, let's just say in opposite to the toilet paper, completely understandably happened in the lab consumables business. But yes, that's taken a long time to unwind, and Sartorius has suffered because of that, down in the last year about 40%, about 66% off its highs. But things are starting to look up a bit, Steve. So Wednesday, Sartorius reported, they said that their sales were up 6.5%. And whilst lab sales were muted, bioprocessing actually rose by 10%, which is the area that everybody likes about this company. They said order intake was high, bringing book-to-bill ratio well above 1 for the first time in a while. EBITDA up 12.2%, bringing margins up to 29.8%, very much a volume business. Full year guidance that they said sales would be up about 6%, EBITDA margin of 29 to 30%. Op cash flow, obviously, up to 139 million euros. Net profit was up 21.4% to 85 million euros. So you're starting to see some of that volume drip down to the bottom. CEO said, who is Joachim Kreuzberg, Sartorius has gotten off to a very good start to the new year. In particular, the strong trend in our consumables business continues. By contrast, customers are still cautious about investing in lab instruments and bioprocessing equipment as expected. The fundamental growth drivers of our industry are increasingly playing a central role again. Demand for biologics, often the only effective therapies for things like severe diseases. These will continue to rise sustainably, along with the strong need for innovative technologies that make their development and manufacture faster and more efficient. This is precisely our strategic and operational focus. For the full year 2025, they expect group sales up about 6% and in turn an increase in their profit margins. Yes, so they said about 6% growth for the business, which accounts to about 7% in the bioprocessing solutions and around 1% for the lab products and services part of the company. But they said that due to the above average volatility at the moment, they would urge you to consider this forecast range with a sort of plus or minus 2% percentage points respectively. This is one of the first quarters for a while, Steve, especially since the overstocking, that we've seen a little bit of growth at Sartorius, and the market is very, very excited about that. What do you think?
Probably also helps that you might have your next COVID on your hands at the moment. I mean, one of the reasons you mentioned Novo Nordisk at the start of the show, that was down a lot, and not because they did much wrong, just because Eli Lilly's had a big kind of breakthrough on its GLP-1 anti-obesity drug stuff. It doesn't much matter whether it's COVID vaccines or anything else. Sartorius stands to benefit if there is activity going on in pharmaceutical research, which you'd like to think there will be for, well, basically forever. But it's not necessarily so much of a given as you might think. The US is currently, well, it has a health minister who, at the very least, is more skeptical of vaccines than the previous one was. You can say there's lots of kind of interesting things about what he does and doesn't think, but it's not perceived to be a good thing for the pharmaceutical sector. Um, I always wonder a little bit how I ought to think of Sartorius. I sort of think it as whether I should classify it as a healthcare company, albeit somewhere quite specifically located on the healthcare chain, or whether I should think of it as an industrial, albeit one with a kind of specific focus. But look, lots of industrial companies have specific focuses on certain things. They don't all just make machines. So the reason that interests me at the moment is I sent you a thing, it might have been yesterday or the day before now, which was the Bank of America Fund Manager survey, which showed you what fund managers have been doing in April. Spoiler alert, they've been running into defensive things and mostly cash. Or they've been acting like there's a recession coming. But one of the things they've been heading towards is healthcare stuff. And the thing they've been tilting away from more than anything is industrial stuff. And when I look at Sartorius over the last week or so, which is a good amount of April, and before that, the volatility is too high to make any real sense of it anyway, what I'm seeing is a close to about half a 45 degree angle going higher with a couple of jumps in it. One I assume being their earnings, and the other I sort of assume being the news that Eli Lilly is making progress here. So I'm interested. Well, actually, I'll come back to that in a second. But healthcare stuff is usually a sacred cow where tariffs are concerned. People in trade wars generally don't let people's medication get in the way of that on either side of historic kind of tariff battles and import taxes and so on. So Sartorius looks to me like it's quite interestingly positioned here, and it is good to see them starting to show some signs of growth with the book-to-bill ratio, as you mentioned, above 1. I'm not aware of any companies that issue a book-to-bill ratio that aren't military contractors, actually, but it makes good sense as an industrials number. It's basically what you sold last month and what you just billed out for. So it's any number above 1 implies growth, very roughly here. So yeah, slightly, what I'd say 1.1 something, I think was your number there, but that's a solid sign that things are starting to tick up. Stock's been coming down quite a bit, but yeah, I was impressed by this, starting to turn around, and you can see why they might be a durable prospect here.
Yeah, now we have to hope, Steve, that the market doesn't get super excited about it next time it does. Next time it does okay and sends it off. So hidden in the back of this report was that they'd also agreed to acquire a company from off a Swedish pharmaceutical company. They're called MatTech. And what they manufacture, Steve, is 3D micro tissue models. So it's essentially synthetic tissue. Now, I thought this was, if you remember back in the day when we were talking about things like this happening in the SPAC days, there was a company doing this, but it's actually not for that. It's these little tissue models that they produce, they mimic human tissue sort of architecture and function. So it allows pharmaceutical companies to test things on the skin that they would have otherwise tested on animals. So that should reduce the amount of animal testing that goes on. And so that should be quite a nice thing to add to the portfolio. Now, this fits in quite nicely with Sartorius's other products, the sort of cell analysis instruments. They have they sell like an AI supported data model as well. But yeah, I think it makes it quite a comprehensive sort of solution in this area. And anything that reduces animal testing has to be a positive, I would say, Steve. So they reckon it'll contribute about. It's going to be a small amount of. It generated about $20 million of sales last year, with EBITDA margins that are just similar to Sartorius. But you have to hope that being under the Sartorius wing and part of a larger offering of products in that similar area, that this should see some pretty decent growth as well. So in America, in Slovakia, is where they do the production. So it will be be interesting to see how that one goes. But yeah, I think it's a very interesting product that's been added to the mix.
It is interesting, isn't it? And I think you're right in thinking that I think I'd rather, if I was this kind of company, be part of an organisation like Sartorius than trying to do this by myself. I mean, when I've been poking around the AIM, there are some interesting looking companies with similar kind of quite possibly very, very good products, but there's always quite a lot of execution risk with them, and doing it by themselves means that they can find themselves in difficulties where it comes to capital if things start to get too tight. But part of an organisation like Sartorius, which I think I'm looking now, has a pretty strong balance sheet, actually. That'll be no bad thing. So, yeah, being part of that should be a big help, I think. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.